There's good news on the economic front. On Friday, the Dow hit its 8th consecutive record high. At the same time, the Department of Labor released the July jobs report showing an increase of more than 200,000 jobs and unemployment falling to a 16-year low. For more on this, we turn to CBS News business analyst Jill Schlesinger. Jill, good morning.
Good morning.
This is good news, yeah?
Yeah, I'll take it. 209,000 jobs created in July. That means that our monthly job creation for the first 7 months of the year is about, let's call it 185-ish a month, right? That's just behind last year's pace. And frankly, a lot of economists are very pleased by this because they say in the 9th year of a recovery, to be creating 180 or 185,000 jobs a month is fantastic.
Usually we're running out of steam here.
Exactly. And we saw some good broad-based gains across different sectors, although not so much in manufacturing and construction.
4.3 is the unemployment rate. What does that mean for us?
Well, I mean, look, it is a 16-year low or tied with a 16-year low, and it tells a story, but not the whole story, because we also look at another unemployment rate, just to confuse you. It's a broader unemployment rate. It means I don't have a job and I'm actively looking, or I have a part-time job and I want a full-time gig, so I'm sort of disgruntled.
Right.
That rate is 8.6%. That is still above where we were before the recession started. So not all hunky-dory on the labor front just yet.
Right. We're talking about the labor participation rate.
Yeah, another little annoying signal that
Confuse us more. No.
Yeah. Okay, so
seriously, this is a number that people have been making a lot of in the last couple of years.
So you will hear people say, people are out of the labor force. What does that mean, right? That's what this is measuring. It's saying who's in the labor force, who's actively looking for a job. This rate was up at about 66% before the recession started. Now it's down to around 63%. That's near a 40-year low. What does that tell us? Well, about half of the drop is baby boomers are retiring. The other half, we're not so sure. There are people who are maybe not having the skill level necessary in the current economy. This is what you hear from a lot of people who are in industries that have been downsized. So we still have to pay attention to that.
We had record highs for the Dows this week. What does that mean for us? What does that tell us?
Well, I think what it tells you very clearly is companies are making money. And we're just at the end of second quarter reporting season. Companies' earnings in the S&P 500 are up 9% from a year ago. That follows a 14% increase in the first quarter. That is very good news for corporate America. Of course, the stock market's not the economy, and about half of Americans don't own a stock, a mutual fund, or any it means nothing to them. So they'd rather get a wage increase.
The key thing that we've been looking at for quite a while that doesn't seem to be moving too much is wages.
Yeah.
Despite all this job growth we've had, what's happening with wages?
So wages up 2.5% from a year ago, and you're absolutely right. That is a missing component here. And the reality is that with the labor market tightening, economists really thought we were going to see wage increases of closer to 3%, maybe more. What is happening is likely that in certain areas we are seeing big wage gains, right? You're a software engineer, you're getting a wage gain.
Yep.
But in other areas, it's dragging it down. So the overall is not so hot. The only good news is inflation's really low. Prices are up only about 1.7% from a year ago. So if you got a 2.5% increase, prices up by 1%, 1.7%, you should be okay.
You're doing okay.
Overall, a good report.
Jill Schlesinger, thanks so much.
Sure.